What's going on? Welcome to Blockchain Tech and Finance News. If you're on the YouTube side, please do subscribe, turn on the bell notifications. My son's picking his nose right here on the stream. He's hanging out with me here. I don't know why I just turned that on. Sorry. Welcome to Blockchain Tech and Finance News. It's Saturday. I'll be trying to get this stream rolling for 11:30 a.m. EDT time. Let's see. I'm going to share this stream out. Chat with me. Let me know what's going on in the chats. You can see you on the chat there. And I'm going to take this obnoxious thing off my screen. If you want to search my art, KinSAMURAI and OpenCN Foundation. On TikTok, KinToshi GG. Instagram, KinToshi GG. Twitch, KinToshi GG. I'm streaming on Twitch and YouTube as well as Twitter right now. And this show is, again, Blockchain Tech and Finance News. Smash the subscribe button. Live weekdays, 7 a.m. EDT at best, and Saturday, 11:30 a.m. EDT. It's more a little relaxed show today. So, let's see here. I'm going to share the stream out. I'm going to go in the first piece of news for the day. So if you're on the Twitter side, yeah, please do retweet, tag some friends, say what's up in the chat. All right. And a bunch of people following me. All right, let's do some follow backs here to y'all. So yeah, chat with me. I'm gonna keep the chat open for a bit while we get this going. Wenhend, Diarn, yo, vibes, what's up? Hey, thanks for saying what's up on the Twitch side. Wooin Hen. I'm gonna say Wooin Hen. Sorry if I'm butchering that. What's up over on Twitch? Nice, got the vibes. Yeah, I'm just sharing this chat with me. Let me know. Let me know what kind of cryptocurrency, finance, technology news. My nose ring's about to fall out. News you'd like to see featured here. Saying what's up here. I am just kind of sharing this onto the Discord channels and onto the different Twitters on the retweets. And while we get this stream going here. All right. Wow. I'm gonna have to swing back through on follows later. Let me get this going out.
Oh, great. Does it just have to be the ghost wall? Oh my gosh, that guy's wild. I'm just gonna try to.
All right, those are all shared out. Let's go into the stream. Oh wait, I just throw it up on the Discord side. Good lord. All right, one more stop on the Discord side. Oh, it's already there, showing them live. Never mind.
Okay. It's wireless one. So I'm not really gonna pop it. Oh, man, he's right there. Now I'm just gonna yeah, under that.
Now we're ready to go. Let's go. Let's go for the stream. I gotta start doing this before sharing it all out while we go live. Things like that. I'll check my audio levels. Also, I can see you in the chat on Twitch, YouTube, and Twitter. So again, chat with me. Let me know what's up. I'm just having a sip of water, and we're gonna go right on into it. Actually, let's just go. Let's go. Graphics up. Starting out today, we got I'm going to go through the markets on Market Watch. We got through Market Watch, we got the Dow down 0.45%, S&P 500 down 0.72%, Nasdaq down 0.9%. Global Dow is down 1.79%. Gold is up 0.06%. Oil is up 0.34%. Oil is up 0.34%. And that's in the U.S. Markets. In Europe, FTSE 100 down 0.62%, DAX down 1.66%, CAC 40 down 1.31%, FTSE MIB down 1.14%, IBEX 35 down 1.25%, Stock 600 down 1.58%. In the Asia markets, we've got the Asia Dow down 0.75%, Nikkei 225 down 1.11%, Hang Seng down 0.89%, Hang Seng, Shanghai down 2.3%, Sensex down 1.82%, Singapore up 0.01%. Again, these don't really change over the weekends, it seems such. The euro is up 0.02%, the yen is down 0.39%, the pound is down 0.08%, the Australia dollar is up 0.04%, the DXY index is down 0.09%, and the Wall Street IDX is down 0.11%. In the rates markets, I might just go ahead. The US 10, I'm going to skip the rates markets. I'm probably going to skip the futures. Actually, you know what? Let's do the futures. Let's go. We got DGIAF down 0.19%, S&P F up 0.32%, NASDAQ F up 0.23%, gold up 0.06%, silver up 1.21%, crude oil 0.34%. So if you're all in on silver, good job for you, up 0.12%, 21%. Bitcoin on the crypto markets, Bitcoin and USD is $19,986, up 1.23%. Ethereum is up 0.71%. XRP is up 7.89%. Bitcoin Cash up 0.92%. Litecoin, I'm just gonna do the Bitcoin Ethereum markets basically, to be honest. All right. On to our first piece of news here. I'm just going to load it right in. I'll load it right in on the page. This piece of news is from Cointelegraph, and we're going to start with NFT news. So, news behind the NFT hype, the need for reimagining digital art valuation proposition. So, this is from Arjit Sakar, writer for Cointelegraph. Beyond the NFT hype, the need for reimagining digital arts value proposition. Again, if you have certain news you'd like to see here, let me know in the chats there, okay? The true potential of NFTs lies beyond profile pictures and art and into solving real-world cases, implying the need for brainstorming fresh ideas. Check my mic's on. Good. With cryptocurrency prices wavering this year, non-fungible tokens, NFTs, and other sub-ecosystem investors have also found themselves in the grips of a bear market. However, looking beyond the trading of value of Ethereum, NFTs were primarily created to represent assets and ownership in the real world and in the real and virtual world. The bear market, as a result, has reignited discussions around how NFTs can backtrack and focus on attending to use cases while the market recovers. In the conversation with Cointelegraph, Tony Ling, co-founder of analytics platform NFT Go, shared insights into the NFT ecosystem, revealing the expected trajectory of the ecosystem. Cointelegraph has a statement here. NFT's rise to mainstream popularity is often attributed to the various real-world use cases it can and has solved. What is your take on the falling NFT market? Do you think the market is set to recover? And Tony Ling, answering the question requires explaining the value base of NFTs first. Currently, the NFT market is mainly driven by 4 categories: art, PFP, profile pictures, land, and membership. At the moment, PFP is the most dominant. The value base of NFTs mainly concludes 3 parts: financial products, collectibles / luxury goods, and memberships, among which the financial products are currently dominant, whereas the derivatives model of NFTs is still in the very early stage. Therefore, with the overall debubbling of the crypto market, NFTs are a low liquidity derivative of fungible tokens, FT, are bound to fall accordingly. This is to be expected. However, I believe that as the crypto market picks up in 2023 to 2024, the value of NFTs has room to grow several times that of the larger crypto market. Its value growth will come from at least 2 aspects. One, with the development of NFTs and meta universe related technology, NFT use scenarios will be more abundant and the consumption property of NFTs will grow. And this consumption property is not only to solve real world problems, but also to create new scenarios that do not exist in the real world. For example, all assets in other deeds metaverse are NFTs, and these NFTs themselves will generate various economic interaction scenarios, thus realizing new consumption to help people better fulfill their needs and even develop into new productivity tools and business forms. Then 2, the development of various NFT derivatives, including NFT fragmentation, NFT FI, NFT mortgage lending, and NFT fixed income products. These new financial products will enable investors to participate in NFT relatable investments in a more flexible format, thus attracting more capital, both institutional and individual investors, to this market. Despite the losses and reduced hype, many projects are still considered viable investments. What do you think is driving this trend? How important is it for NFTs to serve use cases, or is it just investors looking to make a quick buck? TL, the driving force in any trend is both a story created by the speculator and the real value. Especially in the days of an industry, a bubble is more of a reaction to uncertainty, and I believe that it's primarily builders like us who embrace the uncertainty that is driving the trend. Of course, in addition to builders, large funds, including funds in the crypto space, mega funds, and even funds that used to focus on traditional areas are also very important drivers. Indeed, some of them want to make a quick buck, but for the perspective of capital efficiency, I don't think right now is a good time to make a quick buck in the crypto market. What trends are still relevant from the early NFTs days, irrespective of price fluctuations, and what are new trends you believe will get popular in the coming future? So this is a question from Cointelegraph. And an answer, first of all, more and more people are paying attention to NFTs, and there are bound to be orders of magnitude more in the future. Data from NFT Go shows that there are currently over 2.96 million wallets on Ethereum that hold an NFT, compared to just over 200,000 in August 2020. Despite the current market sentiment being cold, there is still 20 to 30,000 addresses trading NFTs every day. Of course, this figure still has tremendous room for growth. Secondly, builders are continuing to build. You can see that many NFT-related companies have recently acquired financing. Furthermore, although the market has recently been bearish, there are still successful new projects like Goblin Town and Meme Land emerging in the market. So in the recent boom and bust, how are DeFi protocols handling the bear market? Although the various PFP projects in the last NFT summer had their own unique characteristics, many were still following the paradigm set forth by the Bored Ape Yacht Club, BASI, With the further development of the NFT industry, a new mega trend is bound to emerge. This new trend, I guess, will be the outbreak of the content ecology of the metaverse. The definition of content here is broad, and games in the metaverse can also be defined as content. As I mentioned earlier, the enhanced consumers attributes of NFTs will help the industry recover, and the consumer attribute means that NFTs will generate non-investment income cash flow for their holders. One important way to do this is to build content in the metaverse and let the builders own the content and generate revenue. The enjoyers of the content receive intrinsic rewards and are seemingly happy to pay for them. So Cointelegraph question, what is your take on current investor sentiment? How do you think it affects the overall NFT market? What can NFT products and companies do to improve engagement? In answer, the NFT market sentiment is cold for two main reasons. One, the price of Ether is in a volatile period, and a large number of investors are in a wait-and-see phase. Two, the PFP narrative and growth pattern are nearing their end, and the recent emergence of projects has not yet brought a new pattern, thus making it difficult to bring new expectations to market. The cryptocurrency industry is cyclical in nature. I personally recommend that you continue to explore new directions in the industry while keeping enough capital to wait for the next cycle of the crypto industry and seize the opportunity. I feel that crypto tokens alone are we're a protocol on DeFi. You saw it with SafeMoon and Shiba Inu, but I really think moving forward, NFTs will dominate, and tokens are just going to be attached to those NFT marketplaces and ecosystems. As you mentioned, the scope of the NFT market is only limited to the imagination of entrepreneurs. What are some of the use cases that NFTs can and should serve as it beaches further into the mainstream? In this regard, I want to point out three major subsets of use cases where NFTs are well positioned for causing mainstream disruption. The new art form digitization allows for richer forms of artistic expression, and the emergence of NFT and related eco products solves the problem of digital art ownership and better helps art creators to make profit. As the digital world merges with the real world, the penetration of digital art in human society will become more and more widespread, thus becoming a huge new market for collectibles as well as luxury consumer goods. In question, crypto for foreign trade. What do we know about Iran's new strategy? PFP, self-expression, and new forms of organization. I think one of the main reasons for the popularity of PFP projects is that they better meet the human need for self-expression. The ability to tell others who I am is an important human spiritual need, and PFP NFT projects and related ecologies create a good way to meet this need. The PFP NFT projects and their extended community has not only given users a medium for self-expression, but also made it easier for people to form communities with others who share similar expressions. Likewise, as the communities evolve, these similar people may create new forms of organizations, such as decentralized autonomous organizations, DAOs, and to influence society outside of their niche community. Now, new public blockchain-like carrier, current land-based projects such as OtherDeed and Sandbox and Decentraland. Decentraland is the OG right here. May evolve into something similar to public blockchains in the future. New NFT projects, games, and applications may all operate within the ecosystem of these land-based projects. So, becoming their own chain, I guess. That's what that's saying. So here's an article here that I just read from Arijit Sakar. Beyond the NFT hype, the need for reimagining digital art's value proposition. I'm going to go right on to the next article here. So let me know your comments on this. Also, I have all these articles on the recap on the YouTube side, so you can go find all of that there. All right, let's bring up this next article here. This is from NFT News Today. I found an awesome, cool site here. I think I'm going to read from this NFT News site as long as the information is relevant and accurate. It seems pretty true here, but it's a nice site and it provides a lot of awesome, cool content here. So let's go right on to this NFT News. This is from Stefan M., writer for NFT News Today. The White House wants to make the NFT space greener. A report released last week by the White House calls for all blockchains to adopt measures that would make them more eco-friendly. NFTs have been singled out as a particularly energy-hungry corner of the blockchain world. While the non-fungible tokens don't cause any environmental impact themselves, the energy needed to produce them does. Most NFTs are minted using the POW, Proof of Work protocol, which uses large amounts of energy to mint new tokens. It's been said that a single piece of this crypto art uses as much energy as an art studio in 2 years. There are, however, more environmentally friendly ways to produce NFTs, as a new report from the White House is urging the NFT space to adopt them. Climate and energy implications of crypto in the US. The report published in the first week of September calls for all blockchain chains to make measures that would make them more eco-friendly. It argues that blockchains which use POW, proof of work mechanisms, such as Bitcoin and Ethereum, are particularly energy intensive. Ethereum, for example, is estimated to use 20% to 39% of the total energy used by all blockchains. The move of proof of stake could help reduce the energy consumption of Ethereum by up to 99%. Luckily, with the merge just around, so this already occurred. The merge is here. It's done. What about Bitcoin's environmental impact? Things may be looking up for Ethereum, but what about the most popular cryptocurrency, Bitcoin? Unfortunately, the report isn't as optimistic when it comes to Bitcoin. The report states that the United States is currently leading the force in Bitcoin mining, obviously as China banned Bitcoin mining. If American miners want to stay ahead of the curve, they need to start using more environmentally conscious mechanisms. In the worst case scenario, the US government may allow China's initiatives to ban all things crypto. That would be a major blow to the industry and could have a ripple effect worldwide. Although it's worth noting that China's ban did not do much to slow down mining operations. Obviously, China is actually implementing NFTs in their art curation sector of their whole country, nation, but they're not calling them NFTs, they're calling them digital collectibles. How the blockchain could help monitor climate change. While there are many critics of blockchain technology concerning climate change, the White House report also states that the technology has the potential to play a role in the environmental market. Specifically, it is mentioned that the DLT, distributed ledger technology, could enable the coordination of distributed ledger energy resources and broader supply chain management. In other words, the government sees potential for blockchain technology to help fight climate change, not contribute to it. From here, where from here for the NFT, I don't know what that means, but that's a weird title. Back in March, the government issued Executive Order 14067, which calls for the responsible development of the growing sector. Well, the White House is now following up on that with specific measures that could help make the entire NFT space more sustainable. Outright banning the technology or certain aspects of it would be a major setback, but the NFT industry could continue to grow while being more eco-friendly with the right measures in place. Time will tell how this all plays out, but it's an interesting development worth keeping an eye on. Great article. I like this article. I like this website too, providing this news information. So we'll go there. I'll do research through here more often. All right, next article we're spinning up here is from CoinDesk. BNB Chain and Google Cloud work together to advance the growth of Web3 and blockchain projects. This is in the business sector of Cointelegraph. So we're going to go into some tech news. This is basically like technology news, shifting from NFT news, crypto, kind of blockchain specific news, and going on into, again, technology news. Right here we have BNB Chain and Google Cloud work together to advance the growth of Web3 and blockchain projects. The strategic collaboration plans to offer foundational infrastructure, cloud computing credits, and mentorship to come to some Web3 and blockchain startups. So this is writer Xin Yi. I think BNB Chain, the blockchain closely linked to the crypto exchange Binance, is partnering with Google Cloud, aiming to support the growth of early-stage Web3 and blockchain startups. Make sure I got this up in the Jumbotron. Yes, it is. Let's go. Projects based on BNB Chain can now access Google Cloud infrastructure, including the ability to analyze on-chain data and encrypt information through Google Cloud. A press release said about 150 projects under a BNB-focused accelerator program will also get accelerated access to Google Cloud Startup Support Program. Google Cloud is a very good Web 2 player and has really done a lot of Web 3 stuff. It's important for us to just work with big players who have big visions, and we share the same DNA and same vision, said Gwendolyn Regina, investment director of BNB Chain. The latest cooperation with BNB Chain allows Google's accelerating step into the Web3 world. Earlier this year, Google Cloud added crypto mining malware threat detection service and launched its new dedicated digital assets team. So representatives of Google did not comment by press this time. So we're definitely going to be hearing more about this, and I will be following up on that as well in future news articles. Let's spin up the next one, which is coming from Cointelegraph. So this next piece, while I spin it up here. Let's go. Blockchain Association calls White House's crypto framework a missed opportunity. So this is from writer Turner Wright for Cointelegraph. Spin this article up and go right on into it. So Blockchain Association calls White House's crypto framework a missed opportunity. Critics claim the Biden administration's reports focus on environmental concerns over crypto's energy consumption and illicit uses rather than concerns over crypto's energy consumption and illicit uses rather than the technology's benefits. I mean, they got to weigh the risk factor. So obviously they're going to focus heavily on the risks and then discuss the rewards after assessing out and organizing and dealing with what the risks are and how to competently mitigate the risks. So that's fine to me. Members of the crypto space and advocacy groups reacted to United States President Joe Biden's administration releasing a regulatory framework on digital assets, with many suggesting the White House focus on the potential negative aspects of crypto. Again, very important to weigh in on the risks, structure, mitigation of the risks, and then talk about the positives and the rewards. In a Friday announcement, the White House said that the federal agencies and departments had submitted 9 reports, all as required by Biden's executive order on crypto from March. Among the information in the fact sheet included policy objectives for the U.S. central bank digital currency, ways to mitigate the possible impact of crypto's energy usage on the climate, regulatory aims for enforcement acts and rules to address risks and consumer protection. The Biden administration said that the Treasury Department will report on an illicit finance risk assessment on decentralized finance by February 2023, adding federal agencies will continue to expose and disrupt illicit actors and address the abuse of digital assets. In addition, the White House said it would support payment systems akin to FedNow, which the Federal Reserve planned to launch in 2023. Crypto analyst Dylan LeClaire and MicroStrategy co-founder Michael Saylor both criticized the administration's stance on Twitter, claiming it was using environmental concerns as a pretext for extending its control over digital assets. If you don't like how someone is using energy, pay a higher price than them. No amount of hysteric screeching about climate change will stop the next block from being mined. That is true in that regards. Today's reports and summaries from the Biden administration's executive order on digital assets are a missed opportunity to cement U.S. crypto leadership, said Kristen Smith, executive director of the U.S.-based Blockchain Association. While intended to be part of a broader government and stakeholder effort to bring better regulation, it's like to say more competent regulation, to crypto assets, these reports focus on risks, not opportunities, and omit substantive recommendations on how the United States can promote its burgeoning crypto industry. So the Wolf of Wall Street has some sort of thing there if you want to read that. Again, I have all these articles in the recap on the YouTube side. Speaking to Cointelegraph, Sheila Warren of the Crypto Council for Innovation said the policy recommendations seem to be based on an outdated and unbalanced understanding of crypto, which could leave the details to be determined by other lawmakers or the next administration. In the hearing yesterday on regulating crypto, many seemed worried about other countries overtaking the U.S. Regulation by enforcement is not regulatory clarity. If we regulate by enforcement, it also gives other countries a clear runway to figure out how the tech works for their interests, which may be contrary to the U.S. So they have a related thing here. An article, the reports on establishing a comprehensive regulatory framework for cryptocurrencies in the U.S. were some of the first required since President Biden announced the order in March, but the work is far from over. The Treasury Department and Fed will continue to research the implications of releasing a digital dollar. This has been a talk for a long time, the Fed coin and stuff. The White House said, China's already doing it with the digital yen, right? Their digital currency. Anyways, I don't think I correctly stated saying the yen, but let's go. The White House said that the Financial Stability Oversight Council will publish a report in October on the financial stability risks of digital assets and related regulatory gaps. All right, so that's this right here. Blockchain Association calls White House's crypto framework a missed opportunity. I find some yay and nays in that in my mind. Again, you gotta weigh in the risk factors compared to the rewards, because the rewards won't ever occur. The reward from something won't ever occur if we can't mitigate risks within it, and then risk after risk will just take place. Failure after failure will just take place. There will be no rewards. So and factors will just keep plaguing the space. So yeah, mitigating the risk, then allowing the door to open up to rewards is how this needs to go. So NFT mayor. Let's see. NYC Mayor Eric Adams. Sorry, my son was playing like Roblox, and I was asking them to maybe play something else because the Roblox is some of the stuff isn't really not what I think is best for our children to be playing dynamically. Let's keep going. NFT Mayor Eric Adams asks tech executives at private dinner to keep companies in the city. As far as related to Roblox and tech, a lot of people who build stuff in Roblox is trash. All right, stop building your trash in Roblox game. Let's go off the beaten path here a little bit. All right. I feel what I'm teaching my son is to build really awesome, cool, fun learning initiatives in a game like Roblox in the technology sector, right? That's how you can teach your children tech. But playing that stuff, be wary. Watch your children playing Roblox and only let them play a few things, because what people build in there is again, I'll say it, trash. Not what our children should be playing. You should be focusing and paying attention to what your children are playing in Roblox, most definitely, and monitor them like that. Let's go on. Sorry about the little diversion there, but we've got this article. Let's see, how many articles do we have left? We've got 2 more articles here, this one and one last one. So this is in politics and kind of the tech sector. All right, something I found in technology. So this is from CNBC, from Brian Schwartz, writer. NYC Mayor Eric Adams asked tech executives at a private dinner to keep companies in the city. The key points: over entrees of steak, halibut, or pasta, and copious amounts of wine. Adams made an impassioned plea for tech executives to stay and invest in New York, said one attendee. Got to warm up with that wine to get your point across among each other, right? Longtime angel investor Ron Conway and tech investment firm managing partner Josh Mendelson were among the co-hosts. The dinner comes as City Hall officials held privately fielded complaints from tech leaders about skyrocketing rents and surging crime rates. So here's an image here. New York City Mayor Eric Adams speaks to attendees while they take part in New York Democrats for Election Night watch party with Governor Kathy Hochul and Lieutenant Governor Antonio Delgado during New York primary election in 2022 in New York, U.S., June 28th, 2022. At a private dinner Wednesday at New York's swanky Le Pavilion. Pavilion. New York City Mayor Eric Adams called on tech executives to keep their companies in the city, even as industry leaders raised concern to city officials of soaring rents and an increase in violent crime. Over entrees of steak, halibut, or pasta, copious amount of wine, Adams made an impression plea for tech executives to stay and invest in New York, said one attendee. He told more than 24 tech leaders New York City needs and wants technology companies. Another attendee said, adding that city officials want tech companies to help grow the economy of the city. Adams spokesman Fabian Levy confirmed the mayor spoke to the tech executives, but said Mayor Adams wasn't there for dinner. While we don't discuss private conversations, Mayor Adams always welcomes and encourages businesses to come to NYC, Levy said in an email. During his remarks, he spoke about the importance of tech to NYC and government innovation. The select group of diners felt incredibly impressed with his accessibility and understanding of their industry. One of the attendees said the people who described the dinner declined to be named in order to speak about a private event. Adams' bid to encourage tech leaders and companies to stay in New York comes as City Hall officials have privately fielded complaints from tech leaders about skyrocketing rents and surging crime rates. Median asking rents on active listings throughout much of Manhattan and Brooklyn jumped 40% more in the second quarter compared to the same period last year, according to Bloomberg. The NYC Rent Guidelines Board recently voted to increase rent for those who lived in a rent-stabilized apartment, NBC New York reported. New York City's crime statistics have also been in flux since the start of July, when shooting incidents across the city rose from the prior year, the city said last month. However, shootings in August dropped by about 30% from the same month last year, according to city crime statistics, but there was a year-over-year jump in other crimes over the same period, including burglaries, robberies, and grand larceny. Longtime angel investor Ron Conway co-hosted the event with Josh Mandelson, a managing director of tech-focused investment from Hangar, Mike Forrence, a fellow partner at Hangar, and Julie Samuels, a co-founder of New York tech advocacy group Tech NYC, according to a list of hosts and attendees provided to CNBC. Famed chef Daniel Boulud, I don't know how to pronounce his last name, sorry, who runs the company that owns Le Pavilion, stopped by to chat, according to attendees. It was a nice way for Adams to meet tech CEOs, Conway said in an interview, noting that it's important for tech leaders and companies to be civically engaged. Mendelson, Ferentz, and Samuels did not return requests for comment. Representatives for all the other people listed as attending the dinner either declined to comment or did not return a request for comment. Those who attended the dinner could also be of help to Adams when he's up for re-election in 2025. City campaign finance records shows Adams has raised just over $850,000 for his 2025 re-election campaign. Alan Petrikoff, co-founder of the venture capital firm Graycroft and Conway, are among the attendees to the dinner that have been prolific political fundraisers. Both helped raise at least $100,000 for President Joe Biden's 2020 campaign for the White House, according to the nonpartisan Open Secrets. So, there's some list there, and I'm not going to go any further in this because the article is kind of drying out in my eyes. I have one last piece of informational news here. Let's go right on into it. I'll reset the stream here for a moment. All right, I'm going to close up the stream after this. So this is from DW News. I'm just going to call it DW News. Is China re-exporting Russian gas to Europe? So this is a bit in the finance sector. Okay, we had some NFT news. I didn't do so much crypto news, but other than blockchain-based news, then tech news, got some political finance news, and we're going to close out the stream for the weekend. I do not stream on Sundays, so I pray you have a great and safe family Sunday fun day or independent day, with whichever you do in the world. Stay safe, and I'll see you back on Monday at 7 a.m. EDT time after this last article. Let's go. We got it up on the Jumbotron. Let's open the Jumbotron. Is China re-exporting Russian gas to Europe? This is in the business sector and finance sector. Does it have a writer here? I don't see a writer here. I see one. Author Joe Harper. Here we go. As the EU attempts to unpick its reliance on Russian gas, it could become more dependent on Chinese supplies, some of which come from Russia. So what's the point? This might undermine the aim of reducing purchases of its fossil fuels. They're trying, but let's see what this article says. As China and Russia meet to consider wider issues, reports indicate that exports of Russian gas are finding their way into Europe via China. The global liquefied natural gas (LNG) market is increasingly well integrated, and regional demand shifts can help balance otherwise tight markets. This redirection of flows serves the interest of all parties involved. Nicholas Kumleben, director of energy resources at macroeconomic advisory firm Green Mantle, told DW, ahead of the winter, Europe's gas storage is now almost 80% full, partially thanks to LNG exports from China. The Nikkei reports Russia has drastically, I gotta figure out how to pronounce this. Nikkei? Russia has drastically reduced gas supplies to Europe since its invasion of Ukraine. China accelerating exports of gas. Chinese LNG companies have increased supplies for overseas markets in response to rising demand. So far this year, Chinese companies have sold 4 million tons of LNG on international markets. That represents about 7% of Europe's gas consumption for the first half of the year. Evidence of this came from China's Jovo Group, an LNG broker, which said it had sold an LNG cargo worth as much as $100 million to a European buyer. China's biggest oil refiner, Sinopec Group, also said it had been channeling excess LNG to the international market. Local media and Sinopec had sold 45 cargoes of LNG, or about 3.15 million tons. If Europe is buying LNG from China, then yes, potentially some of it may be Russian, if it's mixed in particular. Anna Mikulska, from the Center of Energy Studies at Rice University's Baker Institute for Public Policy, told DW, I do not believe there are any rules of content origin, and in the end, it is still an issue of displacement of volumes, really. This seems like getting around sanctions on Russia, although the EU has not sanctioned Russian gas. Russia has systematically cut the supply, and LNG markets are interconnected. There is nothing the EU can do beyond not buying from China, but then exposing themselves to potentially serious gas shortages in the winter. Mikulska added, this way, it's China and not Russia that captures a potential additional profits from reselling this gas. China buying Russian gas. Russia's sales of pipeline gas to China grew by almost 65% in the first 6 months of the year compared with 2021. Since the Russian invasion of Ukraine, China's spending on energy imports from Russia has jumped to $35 billion from $20 billion a year earlier, Bloomberg reported. A lot of other countries backed out from doing business with Russia based on the Ukraine invasion, and that only became a step for other countries to step in and do more business with Russia. Obviously. Russia's Gazprom and the China and National Petroleum Corporation (CNPC) signed a $400 billion 30-year agreement in 2014 to build the Power of Siberia, a pipeline with 3,000 kilometer, 1,865 mile section in Russia and 5,000 kilometers in China. The pipeline was launched in late 2019. Is expected to supply China with up to 38 billion cubic meters of gas a year once it reaches full capacity in 2025. Moscow's energy plans call for an increase in exports in China. Russia knows that it needs to diversify into new markets as the EU lowers dependence on its supplies. What Russia sells to China is also on a contracted price basis, and from my understanding, the deal that China and Russia made for Power of Siberia, one was rather more advantageous toward China, also in terms of price. Mikulska reasoned the Chinese would break Gazprom's export monopoly when reselling Russian LNG gas. Albrecht Rothacher, an EU diplomat and East Asia specialist, said the Kremlin would have to be really desperate or politically very weakened to permit this, he told DW. Not enough and too much. Experts warn that Europe cannot expect Chinese suppliers to cover its energy shortages, given that the total amount of gas that China can export to Europe is limited compared with other sources like Russia. Also, as economic activity revives China, the situation will reverse, leaving Europe dependent on Beijing for its gas at higher prices. I'm afraid that China is not really on the EU's radar yet for potential LNG deliveries, Rothacher said. There could be some surplus shipments from Yamal heading west to Europe, but they would be minor compared to what the EU needs to import from Norway, Algeria, Qatar, UAR, Turkmenistan, Azerbaijan, Oman, Israel, maybe Iran, but last but not least, the US to make up for Russian shortfalls, which remain predictable at the moment. So that in the Chinese-Russian cooperation, Mikulska, for her part, believes the situation exposes the issues the EU, as well as the US and NATO, will need to really be thinking about, namely that as they gravitate towards cooperation, Russia and China can work together to manipulate/influence global energy markets to a level that's much greater than if they acted independently of each other, Mikulska warned. This won't be resolved until Europe figures out the issues of alternative supply, and it won't be easy and it won't happen this winter, she said. Mikulska adds that it will also not be as easy for Russia to repeat year after year its high profits from rather low gas sales as European countries move away from Russian gas and as prices hopefully moderate. In addition, there is the possibility that Russia makes itself increasingly dependent on China for demand energy. And while these countries cooperate now, it's a complicated relationship to say the least. All right. So I guess you can read a video here if you want as well from whoever that is. Is China re-exporting gas to Europe? That article here. And that's all I have. That's all I have for the day today. I'm going to close out the stream. My son's over here playing Minecraft. We're going to go outside now. It's getting sunny out. All right. I don't have anything else for the day. I'll be back on Monday, 7 a.m. EDT time. Again, if you're on YouTube, Twitch, or Twitter, retweet on Twitter, like, follow on YouTube side, please do subscribe, turn on the bell notifications here to Blockchain Tech and Finance News. Smash the subscribe button. Live weekdays at 7 a.m. EDT and Saturday at 11:30 a.m. EDT. Also, you can search KinsArt and OpenSea Foundation for NFT art. My artwork. Follow on TikTok, KinToshi GG. Follow on Instagram, KinToshi GG, and follow on Twitch, KinToshi GG. See y'all back. Have a great and safe weekend. Sunday fun days tomorrow. Cheers. Ciao. Peace be with you.